Gold Invest. Explore opportunity.
Welcome to the Gold Invest channel, everyone. What a time to be active in the gold sector, as the price of gold has now breached $5,000, 5,100, I think, even per ounce for the first time. And for the moment, it does not really look like the yellow metal is going to slow down anytime soon. Which, of course, is an exceptionally supporting environment for the company we'll be introducing today. An advanced project developer, gold project developer by the name of First Mining Gold. TSX ticker is FF. And we're talking to CEO Dan Wilton today to hear more about this exciting story. Welcome, Dan.
Thanks, Bjorn. It's a pleasure to be here.
Always happy to have you. So Dan, before we start going into the details, talking about projects and whatnot, could you please give us a brief synopsis of the company for the benefit of viewers who might not yet be very familiar with First Mining?
Yeah, for sure. So First Mining was founded in 2015 by Keith Neumeyer, who's the well-known founder and CEO of First Majestic Silver. And it was founded on the premise that back then, the markets were in a very difficult state, and you couldn't explore for and find gold cheaper than you could buy advanced stage projects. So Keith and a few like-minded folks acquired 8 companies or projects in about 12 months to create this portfolio of advanced stage gold projects in Canada. And so over the last number of years, we've really focused in on 2 of the largest of those projects. So our Springpole Gold Project is one of the most advanced from an environmental assessment process and one of the largest undeveloped gold projects in Canada. And our Duparquet Project, we consolidated in 2023 in the Abitibi Region in Québec, and it's following in just behind. So significant work going on at both.
Okay. Well, thank you for the overview. Now, we already heard a bit about the project. To start us off, though, can you give us a little background on yourself, your track record, very shortly?
Sure. So I come from the sort of the finance side of the business, but really have been working in financing mining companies for 30 plus years. So started my career in the early 90s at a couple of large Wall Street banks, actually moved to Europe and did my MBA at INSEAD in France, and then was in London for about 3 years doing acquisitions work with General Electric. And then ran the mining group of one of Canada's largest banks. I was there for about 9 years, ran the mining group for about 5 of those. Okay. And then spent 5 years as a mining-focused portfolio manager in a private equity fund called Pacific Road Capital. And from there, joined First Mining Gold in 2019, in large part because we saw the opportunity in this amazing collection of assets. We knew that there were a couple of these assets that were going to become mines, and just had the conviction to be able to move those projects forward through some very, very long days of going through things environmental assessment processes and permitting processes and some very difficult capital environments. But yeah, that's a bit about me.
Okay, thank you. So it's always good to know who's at the helm of a junior mining company, or at least a bit. But let's get into it then. You mentioned the 2 advanced projects. One is the Springpole. Let's start with that. That already has a PFS on it, right? Could you quickly summarize the economics of the project? I'm not sure how you will do it. I imagine the price in the PFS is a bit lower. The price assumptions are a bit lower than the price of gold is today, right?
Absolutely. No, that's one of these things that these large projects give you is real leverage to the gold price. So we updated the Pre Feasibility Study at Springpole in November. So very current economics, but even then, it was like a couple of months old, less than 2 months old. And we were running the economics at a $3,100 gold price. Yeah. So that at the time was the long-term consensus. I think you look today, that long-term consensus is probably $3,400 on its way to $4,000. But at a $3,100 gold price, the project had a 40% IRR, had a $2 billion after-tax net present value, a very attractive payback period, sort of around 2 years. And, a production profile that we scoped producing in excess of 300,000 ounces a year, which makes it really rare in the mining industry. There just aren't that many of these large-scale projects in the gold industry that you can actually get that size and scale of production. But interestingly, in the PFS, we ran a spot case at the time, which was $4,200 gold. And people said, why are you being so aggressive with your gold price? 4,200, it's never going to stay there. But at 4,200, the NPV almost doubles. It goes up to 3.8 billion. That IRR is in excess of 60%, and the payback starts approaching 1 year. Like a phenomenally robust project. The all-in sustaining costs in the project, which we quote on a byproduct basis because we do have a significant amount of silver in the Springpole project. But all-in sustaining costs sub $1,000, which again makes it one of the lowest cost producers. But that was we used silver. This is where it gets crazy. We use silver at $35 long term in our study, and today obviously silver's like $110.
Yeah.
So when you look at it, anything near spot, that all-in sustaining cost on a byproduct basis is like around $700.
Okay.
So, for this size and scale, this is one of the lowest cost mines in the world.
Okay. So that sounds pretty good. We'll see how it goes. But I think it's at the stage now where you're waiting to hear back on your environmental impact statement. Is that correct? I think that was done end of 2024.
Yes. Yeah, we submitted the final EA at the end of 24, but we've been in this environmental assessment process since 2018. So it was actually, I think, February of 2018 it was submitted. So 8 years of work on this project. Now, there were a couple of years there where the company didn't really have the money to be advancing it at the pace that we would have liked. But the takeaway for us is, these processes take time. And even though governments are doing a good job of now starting to really try and shorten those permitting timeframes, we just have such a long head start against most other projects, sort of this size and scale in Canada, that most of them haven't even really started collecting environmental baseline data, let alone having a position to be able to actually, submit the project into the EA process. So, we are targeting that environmental assessment decision in Q2 of this year federally, and expecting the provincial decision is going to come in and around the same time.
Okay, so that would be a major catalyst, I think.
Major catalyst. Major catalyst. Bjorn, one of the reasons it's such a huge catalyst is that the Springpole project, the deposit sits in the bay of a lake. And that's always been one of the real concerns that most investors have had is, are you going to get a permit to be able to build these dikes and dewater this bay of the lake in order to have the open pit mine? And, we're highly confident the answer to that is yes. And I think we're only a few months away from being able to demonstrate that. But I think that really is going to open up the investing universe for us, or the investor universe, I should say, because there's still 80% of the investors out there have looked at this project over the last 8 years and said, listen, it looks great. The economics are really attractive. I just don't know if you're going to get that permit. So I'm going to wait and see. So we've started seeing the share price move now, I think in advance of that. We're starting to see some larger institutional investors, start buying our stock, which is part of why we're seeing the share price move. But there's still only a fraction of the larger, gold investment funds that have even had a look at it. And so we know when we get that environmental assessment approval, it's going to have such a huge impact on the share price. So we're very excited about that.
We're certainly keeping our fingers crossed there. To see Q2 would be very nice. That's not that far away. But in the meantime, of course, you have, as we mentioned, the Duparquet project that's also quite advanced, has PEA on it. Could you give us a brief overview of that, and also, your plans for 2026 as regards to current and future drilling, and where you want to be at the end of the year with this project?
Yeah, that's great. So Duparquet, as I said, we'd kind of consolidated the ownership of it in 2022. We put out that PEA in 2023, but it's important to know this was a project that was taken to Pre Feasibility Study in 2014. So there's a lot of work that's been done on it. When we acquired it, over 4 kilometers of strike, there's 270,000 meters of drilling in this deposit. So phenomenally well understood resource, which is really important because that goes directly kind of to your resource risk. So our plans at Duparquet, we've started some long lead time environmental baseline data collection. They had a full baseline data set in 2013 as they went into their last pre feasibility study. So we're going to have actually a really good, 10-year plus trend line when we update our environmental baseline data there. But the goal is ultimately to move this project through that same environmental assessment process, but in Quebec rather than in Ontario. I think we can scope this project such that it really helps facilitate moving that project along reasonably quickly through that EA process. Part of what we have at Duparquet is some environmental legacy from when the mine operated in the 1930s to the 1950s. So this was a project that was actually the largest gold mine in Quebec in the 1930s, believe it or not. So, but when they left, I mean, as they did often at the time, they didn't really contain the tailings from the project. They just kind of, pumped the tailings out the back of the plant. So there is this environmental reclamation need to happen there. Now, those tailings happen to grade 0.9 grams gold, and that gold recovers, which, in a $50 gold environment in the 1950s, $27 gold environment, it wasn't worth much. In a $5,000 gold environment, a 0.9 gram, 0.9 grams is a pretty high grade deposit, let alone what's in your tailings. So a part of the plan is integrating the development plan with the remediation of some of the historical, mining legacy that's there. But it's a real opportunity as well, working with the municipality at Duparquet to kind of reimagine the existing town that's there. So the town's been there since they built the mine in the 1930s. A very cute little town in a beautiful setting on the shores of a beautiful lake. And so, the opportunity that we have with the town is kind of reimagine the town and imagine the mining project at the same time. So we're really excited about that. We have a great level of engagement with the town. And I think the real plan for us is probably another 20,000 meters of drilling this year. And we're continuing to see the resource grow there. But I think we're driving towards getting to a pre-feasibility study or a feasibility study in 2027. So making sure we're collecting all of that data that we need in 2026 to be able to move that study that one step further. And then again, with all of that environmental baseline data that we'll collect this year, have that really focused on, as quickly as we can, get this project into the EA process in Quebec.
Okay. Well, it sounds like you will have your hands full this year. And I mean, all these studies, of course, they don't come in cheap. But if I remember correctly, you did a financing in July and there was some money coming in from the warrants in December last year. So I think you should be good for a while, right?
We're sitting today. Today with a little bit more than $40 million in the bank and have a pretty steady flow, as you said, of inflow of proceeds from options and warrants exercise, which, most of our options and warrants over the 7 years that I've been here have not been in the money. So it's a very different situation today. The weighted average price of the warrants is probably 22 cents. There's a bunch of 20. And a bunch of 27. And most of the options that the companies issued would have a price sub 20 cents. So traded, yesterday as high as 76 cents. So I think we're seeing a lot of investors who are now just exercising. There's not a whole lot of option value left when you're this far above the strike price. So we're seeing a pretty steady flow of $2 or $3 million a month coming into the company just from the options and warrants proceeds. And then we still have a couple of other assets from that original portfolio that we continue to move forward. So, and not so much with us, but we found partners who have moved these projects forward, particularly Pickle Crow. And our new partners at Seva Gold, we just announced that in December, and that should close in February, and that'll have a certain cash component coming to us as well. But Seva is a very exciting kind of new group moving forward, the Cameron project, and we're going to still own, in the neighborhood of 50% of that company going forward too. Okay. So ultimately, we've spent a lot of our time and energy in monetizing and bringing value out of that portfolio of assets to allow us to move the projects forward when it was really tough to raise money. And we're very thankful that we did, because it allows us to be where we are now in this environmental assessment process, and just that much further advanced than a lot of our peers who made the decision not to raise the money or didn't have other things that they could monetize. So in that portfolio of assets, we've turned into now more than $80 million of cash over the last 5 years.
Okay.
So it's been, there was a time that not too long ago, that was not far off our market cap, Bjorn. So,
Well, no, that's not the case anymore.
Sure.
It's good to know you're the funded. And talking about market cap, our technical analyst just recently had a look at the stock movement and the development of the first mining chart, published that at Gold Invest. And he thinks, although, or perhaps because, you never know with the analysts there, technical analysts there, the stock already had a great run in the last 12 months, that the $1 mark could come back into play in the future. That's not a prediction, that's not an endorsement, whatever. It's just a technical perspective of our analyst. But to round things off, I would ask you to, in your personal opinion, to give us a summary of what can we expect of First Money Gold this year, where you want to be with the company at the end of the year, even taking account that the company has a market cap of $917 something dollars at the moment, and I think 1.3 billion shares out, roundabout. So taking that into account, what do you think could happen this year?
So, I think from the perspective of the share price, the really important catalyst coming around the environmental assessment, and I think there's a few things that play into that, including, it's really our goal to come to agreements with the 3 Indigenous communities that we've been working with around Springpole. The communities have done a ton of work on the project, and I think, when we get to a point that they are ready to move forward with us and express their support for the project, I think that will be a major catalyst. I think you have the federal and the provincial environmental assessments that, again, we're targeting those coming in Q2. Those would be major catalysts. And then from there, we're collecting all the data for a feasibility study. So that data collection exercise is going on this winter, but targeting that feasibility study really sort of at the end of the year. So again, setting us up for what I think could be a very interesting 2027, where you're then looking at project financing. And ultimately, there's still probably 18 months of permitting after you get that environmental assessment, and detailed engineering and permitting. And I think it's our goal that, we're advancing through that in 2027 with a goal of making a construction decision on the project when you're fully financed, sort of late in 2027. So, there's still a lot of work to do to get that far. And we're really focused on sort of moving this forward one step at a time. But I think it'd be a phenomenally impactful year for this company around Springpole. And then at Duparquet, there's still going to be exploration. We've got, getting all the data collected there, ready for a pre-feasibility study, ultimately moving to a feasibility study there in the next couple of years. So, these are 2 of the largest undeveloped gold projects in Canada. They're 2 of the most advanced. And, I think if you look at where you could have projects that you could put shovels in the ground in Canada between now and 2030, there's really not many. I think there's 3 projects, big gold projects in Canada that would fit that bill. So we're one of them. I think there is a real scarcity value that people are starting to recognize to these, large and advanced stage projects. So we just need to keep our head down, keep doing what we can to move the projects forward and, build and demonstrate our social license and, get those environmental assessment approvals. And I think the rest of it kind of takes care of itself.
Okay. Thank you very much. That's a good closing remark right there. Thank you very much for taking the time. And we're certainly looking forward to see how it all goes. And we'll talk again then when there's news. Thank you.
That's great. Thanks, Bjorn. Appreciate it.